Hello guys, glad to have you on board again today. We are Friday, so we're going to take care of weekly closes, having a look at global markets to kind of make a review of the major events of the past week, trying to highlight if there's any potential for of-week trades, whatever, or at least forecast what's the probable for next week. We do a little bit of macro in here, more than we could do on the Monday's podcasts, which are mostly technically based. Anyway, so let's start with the cryptocurrencies. What do we have regarding Bitcoin? It's not a pretty week for Bitcoin, bearish engulfing, probably closing at the lows, even though, don't forget about it, we are trading first Saturday and Sunday as well, so there is still a lot that can happen until then, and this candle can pretty much change without a problem. So what we are currently doing in here is still pretty foggy to me. I can hardly understand, even though remember that we don't understand the market. I cannot put this market into boxes for now. The only box I can give you is, of course, reliably based on a non-subjective analysis, because that's not what I think, that's what I see. Because let's be honest, I don't think anything about Bitcoin right now. I just don't know. Though I need to relate onto technicals, but not short-term technicals. So I would say daily is where I can give a clue about what the hell's going on, because generally when you can't figure out something about market, try to highlight a time frame in which you get a range, because it's generally this: when the market gets not irrational, right? I'm really talking about you can't just put it a shape. You can really understand what's going on in terms of movements. Generally means you're in a range, and you just need to figure out what that range is in terms of time frame. And to me, this is daily. As you can see, it's easy. We can get the two opposite square signals signaling a mature range. At least you can visibly highlight this range. So I would say, and it clearly looks like we can set this trend line for sure. The question is, where is the second one? Is it going to be a trend channel like that, or is it going to be a triangle like that? At some point, I'd say who knows. And personally, I can't tell. I absolutely can't tell. So this is what I've been doing. I basically put it myself ahead of this. Like, all I've done is drawing those fucking trend lines, and I'll wait for further informations regarding those cryptocurrencies. Either we're going to build a support in the nearby area and save the dip out of this one, build a higher low, and we're probably going to have to build a triangle, contract volatility as we keep on going, and then either this triangle will be extracted to the upside or to the downside. Currently, all we can tell is that this triangle is building itself out of a 4-hour context. All right, remember that in a triangle, that's a tip I'm giving you out there. All right, when you build a triangle using the indicators, they will always flush the boundaries first, right? Like go from context to context, all right? Though that's what we've done, 2 sets of wave to the downside, 2 sets of wave to the upside, and as we mature, the triangle will fail in the context or even not getting to the context, which means as we contract volatility, there's not enough price movement to get to the opposite context. So if we fail in here, that's totally possible, and it will just confirm what I think definitely will be a triangle. Like the last time we rejected in the resisting context, not on top of it, all right? So inside, that's important, which means in here either we're going to do the same, like slightly dipping a toe inside and then reverse, or just reverse out of this area wouldn't actually be a problem. And the next one, the next bullish impulses will probably in a set of 2 waves, all right, and they'll hardly get to retrace up to this context is going to go up, all right? Now we do have a positive context channel, which means it's going to forecast, it's going to try to forecast this trend line, all right? This is how this indicator works. So it's going to try to forecast this trend line. But as you guessed, if we do build a goddamn triangle, this is what we're going to be searching for. So don't look out for the next boundary in the trend, in the context channel. It's probably not going to get there. All right, that's just for you to understand. So triangles will mature out of context for the 2 to 3 first boundaries, and then they will just stop trading in there. Right, it's just a tip. So we'll see how this goes in the future, but I personally think this is what seems to be the most likely scenario at the current time. The other scenario is for us not to hold on to this area, break it down, and get straight to the trend channel. In that perspective, the tradable area is close to 8K, and that's a demand area we've got on the order book. On the other books, we can see there is a strong and huge demand out of 8.5. Remember, that's the demand I thought we would be reaching out to when we were still back in the days in here. The market decided to wrong foot us and took my stop losses off. But still, there is still a freakingly huge amount of demand out of 8.4K. So, are we still going to go there? Yes, we can very likely go there. The question is, can we just build a triangle out of it? And if we start building a triangle, you can be pretty sure that the 8.5 area will start to shade as people's demand for this area will start to dampen as people will figure out the triangle will eventually be the most probable structure. So it still requires a lot of patience. Just patience to get more reliable information to trade still remains the top information to me. How do we work out the current area? Because we're trading this, we're Friday, and remember there are 2 days left. And imagine that we stop in here today and tomorrow make a bullish engulfing, then you can be damn sure that Sunday is probably going to retrace us up to 11K. And if we were about to do this, then the weekly candle close we've shown earlier is going to be looking pretty fucking different. We're going to have upper shadow candle, lower shadow candle, and everyone will probably forecast the range. So, I'm not saying I'll be right. All I can tell you is that I somehow have my sixth sense of trader telling me, Phil, something doesn't go right in here. Don't be too bearish. Probably a triangle down the corner. Though, all you can do with this, you cannot trade just because of what you think or what you feel. Even though what I feel is somehow not that bad because I've been trading for so long. So I would say my trader feeling is not what I will trade blindly, but I somehow trust my personal sixth sense. I will always trade it with signals, which means in here, if you want to take that in account, if you want to count that, then all you can do is that, first of all, you need to make sure you're trading something. As you can see, in a technical area, we do trade the 50% trend channel in here, all right, of this trend channel we've highlighted. So we're trading out of the 50%, so we're definitely into a boundary. Something's going to happen in here. Either we reverse or either we accelerate, and we go straight to the bottom area of this triangle, of this trend channel. Though there is a technical area, now you need to figure out a fucking context to trade. Can you trade the 4-hour context? Like we said, no, we're not yet there. We're close to the context. We're trading 76% fib, though you can trade in here, but all you've got is a taking profit. So not the best fucking case scenario. I would suggest you go 1 hour in here, and there you've got something to trade. All right. In here, I would say, yes, you've had an exit suggesting this trending move is nearing its end. We're pushing a little bit further in here, which suggests wait for a few hours. You definitely need more bars in here for another signal to trigger. This kind of signal in here generally gets to trigger a bullish pattern. So you will see early trending signal like this one is probably the one that's going to show up later. If you do have this, a bullish signal, even though we still have a lower low, you can try something out with a very tight stop loss, because either it works or it don't. If it doesn't work, then you really get the fuck out, trigger that tiny stop loss and move on to something else. But if it gets to trigger a bullish pattern, and if you see the triangle and prices moving up, you definitely want to be buying this. Not to get to the moon, really not. But I would say those who want to buy, you can do this. Buying the 50% area of this thing, and if it doesn't work out, you really let it go. But mostly what I would say is that for those who've been selling this area, like I fucking did, if I weren't freakingly stopped out by the market maker, I would still be in that trade. And what I would do right here, right now, is probably taking 20% or 25% at least off the table. So the message in here is that if you're a bull, you're good to go. It's a risk management areas for the bears, so you can enter with a low risk, but you still need a signal, and you need to wait for the signal to be confirmed. So there is no rush. I would say probably today or tomorrow, but there is probably something to do out of this area if a signal triggers. For now, you've got no risk management. You can't fucking trade. For the bears, instead, I would say this is a risk management area. Wait for the signals, but normally you should have partial profit taken in this area. You got a fucking exit signal confirmed by triangle. So if you haven't yet profit taken on the bear side, you really want to consider this probably today. All right? Just a partial profit taking, 20-25% profit off the table at least seems really reliable to me. It's just money management, guys. Yes, I told you not to limit the gains, but this is not limiting your gains in here. You just profit fucking taking because there is a risk. And you rather want to take some money off the table if the market is about to reverse and build that goddamn triangle. You'll still be fine, but you'll be happy you took 25% off the table. Regarding Ethereums, this is where I think things are way more interesting. Because in here, what we have is, yes, great. Not really great. But what I would say is that I can see a motive wave terminating its system in here in a 4-hour context. So we can see the first motive in here, the third very impulsive wave, and now we're building the fifth one. There's no overlap, which means you cannot expect a fifth extended wave in here, though it is an impulsion. All right, 3 waves to the downside. Though if you zoom out in a daily chart perspective, I would say we've got a first motive setting itself in here. Either we're done and we get to new highs, but as this is a 5-way motive structure, I hardly say this is mature. All I would say is this is what leads me to believe that the triangle definitely is the most reliable and probable structure for Bitcoins, because I think in the meantime we could have this and this for Ethereum, like a longer consolidation in which we would just have made the first bearish impulse. There is also another structure I would highlight for you guys in Ethereum, though it's just to give you a glimpse because so many people forget about this kind of consolidation so many times that I'd like to remind it to you. So I'm not buying in 180 area. I'm buying a little bit lower. I'm trying to buy out of at least 166 or 67, if my memory is right, out of those previous highs, or at least the taking profit signal in here right now isn't enough for me to get to buy like blindly. Anyway, what I wanted to show you guys is this. Damn it, extended corrective wave. All right, so we could do this kind of consolidation, and if it happens, it will just bring down the BTC dominance, because remember that we can consolidate this way. Oh, sorry, no, we can't. I'm sorry, we got fifth wave impulse. No, wait. So it's probably going to be an ABC or a flat structure like that, like deep consolidation and just a tiny extension out of the previous lows. So that's still what I forecast to be the most probable. All right. So as we do have a 5-wave motive structure, normally there's just this kind of consolidation that we could get down to. So for our context, look for a signal. All we've got so far is an overselling context. Yes, that's possible, but I would say still risky. As you can see, we're about to close 10 minutes from now lower than the oversold level. So we'll see. All right. If I do have a bullish engulfing structure after this candle, I'll probably buy it. Otherwise, I'll probably just wait. All right, as you can see, we've got 2 sets of motive waves in here, 1, 2. I'll pretty much wait for consolidation and a fifth and final one probably next week. So if we do get that, then I'll wait for slightly better prices on the Ethereum. I'll be honest with you guys, I already have an order pending in the books at 166 or something like that. Not a big order, like 1,500 euros, which is literally nothing for my total account sizing, but yeah, I do have some orders in the book just to buy a bit because those prices really interest me, because there's a huge demand on the order books. Let me just show it to you. All right, that's done. So anyway, aside from cryptocurrencies, because there's a lot to talk about, cryptos have been moving this way this week, but stock market has been moving as well. What the heck can we tell about this? Let's just delete all the technical analysis. All right, let's figure out what happened this week. All right, so let's have a look. Last week, lower shadow candle. The market is now trying to do the same this week, trying to save the dip. I don't think this will work. I think we're very likely going to gap down by next week if we don't close too high. We're still in a negative daily oscillation on the momentum, with a negative momentum as well as regarding to what we've done previously. Let me just, all right. So we've got a falling momentum with already lower lows. All right, so we've got a distortion with price and momentum as the support trend line followed the momentum. The resistance trend lines has been negatively divergent. Right, so we pushed higher, but we failed. So on the momentum, so the momentum is low. The next question is, what does this generally do? All right, normally in here, as you can see, the lines are divergent as well, right? They're not converging to the same area. So when you've got this, like the momentum getting divergent as well, divergence diagonal, all right, we generally get to test the lower area. So in here, it gives us an area of minus 100 in the momentum. So let's be honest, minus 100 is generally means it goes pretty fucking low. So we still have plenty of room to go on the bearish momentum for the weekly chart. We just need to set ourselves into the negative momentum area. Then it's a straight line down to the previous bottom, which is probably going to be broken down. So yes, to me, it doesn't mean we're going to go just right here, right now. It's just in a weekly chart behavior. I think the worst is still to come. And even if we try to save the dip this week again, it still remains a bearish candle close. And I think next week will be as well, until we get to release the energy. Obviously, right now, the momentum is hesitating. We're still oscillating close to the zero value, which means we're both bullish and bearish, but still there is probably a negative forecast out of this. Still, the bulls can find some opportunities. So as long as they do, it's a range. We're battling out there. And that's absolutely normal. Out of hesitations, the bull will still try to save their dips. All we can see right now is that this beautiful mechanic is starting to work far less efficiently than it did in the past. A few days or few weeks from now, this kind of structure would have been way stronger than it actually is right now. We would be strongly bullish after this. Like normally, Trump saved the dip and then we go straight up to the stop losses. We're no longer doing this. So I kind of like that. We're in a bearish weekly oscillation, probably with a soon to come bearish momentum. Not yet, so you cannot stay, you cannot be too aggressive, all right? The final motive right now, the current context is, yes, being bearish is fine. It's probably going to deliver huge gains if we just let it go and risk manage, but this risk management doesn't yet include huge reinforcements. Because if you do play this dangerous game, like reinforcing too soon, bringing down your stop loss though, then you might just expose yourself to being flushed out prior to the actual bearish momentum to set itself eventually. Though I think right now patience for the bears is still required. You just let it go. Let the bulls try their dip saving structures, and when they fail, this is where you profit from them. When they'll trigger their stop loss, you want to reinforce. So reinforcing right now below resistances, I would say that's fine, but the last time you could have done that is in here, was in here, and it was freakingly dangerous to do so. Like I sent you a message to tell you, all right, I see this thing, I don't think it worth any fucking thing but a potential selling opportunity. But if you do sell out of nothing, you're just not trading. I really wanted to sell. I really told you I think it's a selling opportunity, but I've got nothing to trade it. And I thought I couldn't have been any more honest with you guys, because that's exactly what I've done. I wanted to sell. I just said, all right, I can't tell them this because they will sell. So I told you what I done. Nothing, because I couldn't do anything. So even though how hard I wanted to do it. I would have been proven right, actually, but who knows? We could have been there a few hours later and I would just have been wrong. So no risk management, no goddamn trade. If you think that by missing opportunities you're going to get poorer or you're going to get or you're not learning trading, yes, you're learning trading. When you're learning how to pass on a trade because you don't have enough risk limitation to get into it, you're really taking hard lessons of trading. You're really learning hard doing this. So somehow and sometimes just learn how to pass on a trade, even though you really think it's going to work, you really want it to work, even if it works in the end. You don't really give a shit. It's not important. You still have plenty of time, and I personally think I still have plenty of time to reinforce on the weekly chart time frame for Wall Street. If Wall Street is about to go to the downside with the negative weekly momentum I told you about, don't worry, we still have time to reinforce. So, I think right now all you need to do is to have the market top, like I do, have your trades in here with a stop loss at break even, and you just fucking let it go. Wait for them to exhaust the momentum in here so the bear side will reactivate afterwards. So I'm not going to do anything out of this weekly context. Currently what I'm going to be doing is basically letting it go and enjoy a weekend without trading. So I'm not going to take an overweek trade on Wall Street. I don't think it's actually reliable. The only trading activity that it would be possible today is to try an intraday trade out of this resistant context in the 15 minutes, like trying a bearish entry in here and trying to secure it as fast as possible and eventually keeping part of it for the overweek context. But despite that, I don't see anything to do. The current context still remains this 1 hour range. Like, we're trying to build a dip in here. We could have a bullish reactivation later today. Wouldn't necessarily be a surprise to me. I don't know. All I can tell is that we're in a fucking range and no one is able to figure out what the hell is going to come out of this. So I'm waiting. If we get to bearish extract out of this area, like testing, okay, take the range, all right? You said this area is the DOM zone. All right, so if we get into the DOM zone, which we're actually doing, if we get to find a huge resistance in here and going back to the blue context and breaking it down, there is a bearish breakdown signal, all right? Because we'll do context to trend channel to context and probably going to break down this area. That's the only context I think is tradable for a bear. Otherwise, we could just go here and find bullishness and get straight to the opposite range boundary. And that would just be as normal as reversing in here. Both of those things work fine to me. But do I want to sell in here at the end of the week if we end up with a 2 weeks with lower shadow candles in a row? I don't want to be like selling this kind of candles. All right? So if we go to the red area, I'm not going to sell on this today. I'm probably going to start trying to sell next week, but not necessarily jumping into an overweek trade for this. If we get to reject the trend channel, yes, eventually I'll do it. Eventually I'll take a trade, but like I said, I'm going to falsely secure it and stuff like that. Though all I would suggest is I'm curious to see how we're going to terminate this week. If we terminate by a weak candle, like if we fail in here and get to close the week in here, then I'll say, all right, yeah, we definitely got something, and probably next week we're going to be straight bearish, like opening below the previous lows and straight forward to the downside. But for now, I need further informations to forecast that. VIX, I still think we're going to go higher. I still definitely think about that. I think we made our first motive wave, but we're not going to break down the support. I think, yes, we try to pull back a bit. That's probably all we can do. I think the next move is going to bring us to break that resistance. So anything on top of 25 is my next profit taking. We've got a trend line in here. I think that's what we're going to probably try to get to. So that's, I think, the next move. Not necessarily just right now. We can just build some sideways action today in here, not bullish, not bearish, and probably next week doing take care of this area and see if it doesn't react, then it's 30 straight line. All right, but these are the cluster areas I'll having a look at. All right, remember this 27 to 30 area is a huge contest. We've got this trend line to trade as well. So if we just dip out on top of 25 and find a strong resistance, which I doubt, because what we're doing right now is that we're loading up the momentum for more bullishness. So I would say probably yes, a 30 for the next move, and that would just be a minimum. All right. What really brings a lot of concerns to me is this. There is a huge problem in the euro area, like a really, really huge problem. What we have in here is like, you know, the current deposit rate on the ECB is minus 0.40 in here. And now we've got bonds trading 30 basis points lower than that. I would have totally have accepted like 10 additional base points for the market anticipating this, though trading and prior to the ECB changing its rates in September. I would have understand going to minus 60, like hesitating to eventually get 20 basis point reduction into the September area. Now with 30 basis points off, something definitely goes wrong. The move is parabolic. Everyone think they're safe by playing this game, like they all are bullish and they don't want to profit take as the market keeps on rising. Though you know how those structures terminate, parabolic scheme, everybody think they're safe, whether they're not. The volatility will show up, the liquidity isn't there, which means probably a Ponzi scheme setting itself. So we should probably, I think, get back to 40, to minus 40 pretty soon. So I don't know what is going to trigger this movement. All I can tell is that there's probably going to be a huge burst in prices pulling us back to minus 0.40, eventually an ECB member talking next week or whatever. But I still think there is a huge danger regarding this, and the question is, whenever we'll pull back to minus 0.40, is the market just going to take it like it's nothing? All right, we just got overextended, though we retrace, or if the market will say, oh shit, something goes wrong with the ECB, and we might have to readjust. And if that's the case, then remember that if we go for some credit problems in the euro area, then we cannot price in negative yieldings. That's not possible. That's not how it works. So you do as you please, but I can tell you one thing: those rates are absolutely a big problem for the euro area. Like US has its own problem. Like the problems in the US are systemic liquidity problems, because there has been so much money accumulated into very risky areas, which means they better hope the risk isn't going to show up. Otherwise, liquidity issue, credit destruction, and recession is probably down the corner. And they can't do anything to stop it, all right? They just have to brace for the risk not to show up. If the money gets out of the apples and stuff like that, the shit will hit the fan, and there'll be nothing to do against that. Even Trump tweets won't be able to stop it. Even the Fed pulling down the rates won't do anything. If it starts to trigger, it's an unbreakable system. Now, what happens with the euro area? We have our own problem. Our current problem is that people are speculating on the euro's debt, thinking that they can put us down by bringing our rates down, by pushing us to risk-taking. Obviously, Germany isn't playing that game, is still playing over the same old game, though they don't do anything with their debt. All right? It's not because we give us lower yieldings that they're going to trigger more debt rising. So they don't debt, because that's how Germans do. All right, it's simple as that. The problem is, as the German debt is acting as a collateral, because it's AAA and whatever, so people want that a lot because it's liquid. It's liquid. It has a lot of value as a collateral. So the problem with the German debt is not that people want it as a safe haven. It's just that people want it as a collateral. And therefore, huge demand with very low offer has been bringing the bonds prices to the top level, though it's been bringing the yielding to the downside. But the problem is there's a limit to it. There's a huge limit. We're trading the lowest negative rates ever made in the entire market's history in the 10-year yielding. So you have to pay to own this freaking contract nowadays. So you better hope the prices rise, because if they don't, you're going to lose on both ends, both on prices and both on yieldings. So That's absolutely what people, we all know that this is not sustainable. We're not going to stay negative yieldings. People think that's the new paradigm. I can tell you this isn't. We're not going to stay negative yielding for years because that just doesn't work. So people think it will because it worked in Japan. Now let's trigger a deep analysis of Japanese economy, and you better hope it doesn't happen with the Eurozone economy, because otherwise we're facing some huge problems of hyperinflationary systems that will lead us to even worse recessions afterwards. So I would rather like to say, all right, at some point a credit crunch in the euro area is somehow inevitable. It's just that the day it triggers, you better not have assets that will price in this credit problem. So cheap credits, and now you just need to figure out where this credit has been ending. Well, lots of people have been buying housing, not necessarily housing to live in, housing to rent. So those who've been buying many flats to just rent them or whatever with cheap credit, because yes, who knows? I'm just getting to the bank. The bank is going to lend me the money with very cheap interest rates, so I can buy very expensive housing. I don't really care about the price. Anyway, housing is always going to be more expensive because we've got more humans on Earth. Oh my goodness. How stupid that thinking is. So I've been seeing, some of my friends have been doing this actually. So I just recently told them, guys, you really want to think twice about that. It's rather about time to sell most of your housing, rather than waiting for them to lose 30% of their value and your credits interest rates being tripled in the meantime. So yes, they somehow understand when I explained the problem, but they weren't seeing any of it before it. So they all think they're safe. They all think that anyway, housing prices cannot do anything but rise in the future, which is anytime someone thinks it must happen and the opposite cannot happen, there's always money to do out of their asses. And when you say people doing the same thing with the entire thinking process, like housing can only go up and yields can only go down, so I'm fine. No, you're not fine. You're in huge danger, and you're probably in a Ponzi scheme. And obviously when you'll discover the Ponzi, you want your money. There will be not enough money for everyone. So you just brace yourself and hope for people like me to be ready to put you out of your misery. And obviously I'm going to be there. Like I said, I already shared my portfolio exposition for the latest 2 years. What I'm doing right now is a lot of cash immediately available for opportunities. Like whenever the bubbles will pop, people will ask for the money. I'll be there to buy them, but at my price, not theirs. So that's how it works. They will look out for money, because they'll hardly be able to pay their bills or whatever, so they'll just need money. They will no longer need houses to rent or whatever. They'll just need money. I'll be there to provide, but I'll also be there to set the price. That's how it works. So anyway, it's a long process. I'm not saying it will trigger tomorrow, not even in a month or a couple months. All I'm saying is that we're rising the risks. The more we rise them, the obviously the closer we get to the systematic problem triggering. The systematic problem is just like when people will ask for the money in the bunds. All right, just look at the bunds pricing. You like that, right? Oh, great. Unfolding boxes, people thinking that this will only go up, that there is no risk, whatever. You know how these things will end, all right? Obviously, these things get to collapse instantly. And when they collapse, people start to figure out, oh, shit, I was wrong. So yes, bunds, really be cautious with this. Huge problem down the corner with the yieldings. Same goes for the US, obviously, on this problem. Then gold and silver, these ones, they doesn't nearly set any signs of weaknesses. We're overbought, but the market just holds on steady. Same thing goes for silver. We've been trading the daily target in here after breaking through the first one. I thought we would eventually get a retracement in here. The market doesn't want to retrace. It's been working this area pretty much flat. So generally signs of an upward time frame trending, and I think this is what I missed. So I've got a weekly target on $18, and I think we're going to go there, and that's a breakout target, which means we're probably going to go beyond that. So as we do have a double bottom like structure, I think the next big resistance to deal with is 20. So I would say, all right, silver, I'm just going to let it go until we get to 20. For now, I already took my 25% profit taking. I don't want to put them back in the market just right now. I think I'm going to wait for a couple more weeks of hesitation in this area, or we go straight to 80. I don't know. But anyway, I think right now doesn't necessarily need or require an immediate action. So I'm staying with my current exposition. Partial profit taken on the gold already done. Partial profit taken on the silver already done. So I'm just passing by. WTI, I don't know what the hell to do with this. I stay where I was. I eventually want to trade this area, which is slightly higher, if eventually I can manage to get a signal. But I think this range is mature, dangerous. So I'd rather like to stay away. If I do take a trade on WTI next week, it's going to be a tiny, tiny trade anyway. Euro dollar, still the same fucking traded area. I can't understand what the fuck is going on in here. I'm just waiting for this market to actually reverse. We're at the beginning of a bullish oscillation, but just still we can't fucking manage to get bullish or to get high lows. So we're still trying to build some. I'm waiting, waiting, and waiting, and waiting, and waiting. It's endlessly painful. I cannot understand what the hell is going on with the market. And it's in general, all right? Like I said, we're trying to save some time. These kind of things never, ever happened in the entire forex history. Like a year setting itself into 3% variations in prices. It happened in the past, all right? It happened, but not in the current geopolitical context. Like the current trading mess we have should create huge volatility into forex. We have that volatility into so many pairs, but just the euro dollar like feels like a frozen thing. But it's a frozen thing into an entirely like volcano melting system around it. So it feels like absolutely out of any standard I'm used to. So huge divergence with the reality, though I still see some opportunities, but so far these opportunities just can't trigger. It's incredible. This is the kind of opportunity we'll get down to, all right? But oh man, I'm waiting, all right? All that's all I can tell. I'm waiting because, yeah, I can feel there's a lot of money to do in here. Still, a very high level of risk, as this market just doesn't want to fucking trigger. Last week we had something, now this week we're pulling back, so it's incredible. Like we're doing just engulfing every fucking week. We cannot stand to stay to hold on to a stance. So last week was the monthly, was the weekly morning star structure. What the fuck do we do breaking it down? I cannot understand any of it. So this market is no market to me. Like I said, it's not going to end well. It's not going to be pretty. You can be damn sure about that. When this thing will trigger, it's going to be probably the ugliest trend we've ever had. Like things like that. I think it's even going to be worse than that. Like something like that on the opposite direction. Like I think, yes, it's a 20 or at least it's a 15% move to the upside on the euro dollar afterwards when this thing triggers. But so far we can't manage to do it, though we have to wait. That's all I can tell. We need to wait. Anytime this thing gets across the moving averages and stuff like that, the moving averages will go positive, which means we'll have positive momentum with higher lows, and it's just going to be a straight line to the targets. So, yeah, like I said, I'm not. I don't like this, but yeah, I think that's it. That's what we're facing somehow. Like you take this and you put it like that. All right, and some people will say, no, this guy's crazy. All right, we'll see if I'm crazy. But I don't think I am. All right, so just patiently waiting. Lots of opportunity coming ahead, so I'm ready to take a little bit of risk. If I end up being stop loss in this scenario, it's going to cost. Obviously, it will. But if it triggers, I'm also going to take a huge gain. I'm still not crazy freakingly risking in here. Like if I get to trigger stop losses on the euro dollar, it's going to cost me 5% approximately, I think. Anyway, GBP as well. I think this area is just trying to see how low we can go. Hoping and bracing for something to go wrong so the dollar can be strong and strong, but so far we've got nothing. Like even Boris Johnson cannot break us down in here. I hardly think this is the kind of trend target we'll get to. So I would pretty much say, all right, either this is a trend, which I hardly think it is, or we're just done. And like I said, we already made the two sets of motive waves in here, like 1, 2. Normally means we're not making a third one. That doesn't nearly, in weekly basis, it never happens into forex market. We always do two sets of waves, one side, one another. So I would say first wave, second one is probably going to double up. Same thing, like you take that and you double it up, all right? You take it, and as we double bottomed in here, we're probably gonna break this double bottom and just double it to the upside. Like you take this area, god damn it, you take this area, all right, and you double it up. These are my targets. Maximum. I hardly think we're going to go up to this area, but at least this 1.60. I think, yes, it's a long-term trend. Okay, it's not something that's going to set itself today. We're weekly chart, so it's going to take months to get there, but I still tend to believe this is where we're heading to. USD GPY, same thing. Still think we're heading pretty fucking low. Same thing goes for NZD GPY, CAD GPY. They all have lots of breakouts to deal with. AUDNZD finally managed to validate. Oh yes, that's great. This one is great. We've got a good week on this one. The oversold cluster is confirmed, at least for now. It looks like we've broken up the previous month highs. This is great. We'll see how it goes further in time, but I'm rising confidence in this market. Not yet enough to go fully leveraged in here. I'm already leveraged, but not yet at the maximum leverage I'm expecting to go. So there's still lots of room for reinforcement ahead, but not yet. I'm still waiting for further confirmation to do this. But it's heading in the right direction. Though the biggest concern for me right now is really this. Like, what the hell are we going to be doing with that? Are we going to try terminating the week like that, like with an ugly hammer structure or whatever, and what I'm going to be doing by next month is going to be really interesting, because if we get to reverse like that, like next month being crazy fucking bullish, then finally we'll have something to deal with, because right now all we have is a market desperately looking for support, and desperately looking to find it so we can break this goddamn monthly bearish oscillation. All right, and whenever we'll manage to do this, same thing goes in here. We've already made the two sets of waves to the downside. All right, 1, 2. So if you think there's a third one to come, that doesn't nearly happen in such forex market. We always do two sets of waves, like 2, 2, 2. And if you think it different, then you think the market has changed. I don't think the forex market has changed. There have always been rangings in these structures, and I don't see any way this can change. So that's my, at least that's my vision. Like I said, I don't know the future. I'm always risk managing. That's all I'm doing. I'm just searching for scenarios, giving you guys my biases. Then you follow them, you don't follow them. I'm mostly trying to teach you how I risk manage out of those personal biases. I'm choosing. There's a final thing we need to talk about, GE, before letting it go. So GE has been stopped, obviously. I took a trade in here in the 9.20 area. I don't remember exactly, but it was there. Stop was set at 8.50 and got triggered yesterday, as the market is showing some huge signs of weaknesses. This is another potential buying entry area I've been highlighting. I don't know yet if I'm going to rebuy, because I have absolutely no fucking signal to do so. I don't think we're going to break. Remember that there's only one breakdown in a trend. The breakdown has been done in here. This clearly was a final excess, so I'm still tending to believe that we're not going to go lower than the 6.42 we've already made. Still, this would be a huge buying opportunity, but I cannot buy without signal. So I'm going to wait for a signal. I'm going to wait for a bullish reactivation in this market. Whenever this will happen, I think we'll easily get to manage to cross over these moving averages and get to the resistant context and probably the 16 area. That's to come. All right, so for now, patiently, I've been stopped on my speculative trade. I still have, though, the buy and hold, and buy and hold means be really fucking patient, low exposition to those markets, and just be like patient. I told you, you've got the numbers. I bought and hold in this area, like I've got 12, I think, in the buy and hold, something like that. I don't remember. I think my buy and hold is in here. Yeah, 12.30 or something like that. 5% capital. So it's not that big of a deal. It's not going to go to zero, right? General Electric is a huge company. So anyway, even if it ends up going lower, it's just going to be bought out by a competitor. So it's not going to worth zero, all right? So 5% capital, I would say 50% risk. Like I think if it goes below 6, it's going to be bought out by a competitor. So at least 6% buyout guaranteed somehow. No, not guaranteed. Nothing is ever guaranteed, but it's not going to worth zero. So I'm approximately risking let's say 2,000, all right? Sorry, risking 2 to 3% capital on this, maximum loss, all right? And I'm talking in 16. So yes, it's not the best fucking trade I could do, because basically my goal is to get to 16, profit take, and use that profit to buy the next dip with another buy and hold, all right? So the thing is that, yes, I might be wrong, but I don't think I am. It's just, this is the kind of trades that requires a lot of patience. They require timing because they require demand. So far, I thought we were having some demand in here, but apparently the fact that we're going there is either a trap, like we go there for the final time to load up on buyers and then we're going to cross a resistance, or it requires a little bit more patience for this market to have some demand, some people wanting to buy that. When people will want to buy, I'll be ready to sell. Right now, I'm just not selling. Right? I'm just buying prices that feels interesting to me. When I have some, I thought those prices were, they're apparently not. So we'll see further in time. Simple as that. That's pretty much it for today. So I don't see any opportunity for overweek trades right now. Be patient with cryptocurrencies. Be patient with Wall Street as well. I think Euro-dollar next week is going to be interesting, but probably just next month for the dollar. Unless something unexpected shows up, like the panic selling starting all by next week, and in that perspective, VIX is gonna explode. GBP, USD, and Euro-dollar will probably do as well, and stuff like that. Remember that next week we're gonna have a VIX expiration, so they might be trying to do anything they can to prevent the market from crashing. All right, they may be trying to hold the VIX to lower valuation as long as possible, but you can also have things going out of control. Like I told you, the VIX expiration can also be a catalyst. Like early next week, we gap down below the support. VIX is exploding as people get to sell as much as the cheap puts that have been sold will just get out of control. Remember that those guys who were selling the VIX, selling it very hard, they're going to have to get the fuck out with the expiration. So if they feel like things are getting out of control, they're going to have to panic sell in a market with only buyers. To market buy out, all right, these guys were selling, so they need to buy themselves out in a market with just buyers. So there will be a lot of problems and a lot of issues surrounding this kind of context. So I remain buying the volatility, even though I know they will try to contract it and to put it as low as possible for the expiration. Anyway, what I have is this price, so that I hardly think they'll be able to control anything. So patiently waiting. I'll see early next week how this plays, how this game tries to set itself, but I still tend to believe that, yes, huge opportunities down the corner.